Hi and welcome to another video from Trade Simple, Trade Smart. This is Isaac, and in this video I'm going to be going through an application of supply and demand based on an article covered previously. So I'd suggest, if you've not had a chance to look at that, look at that first. And what it does is it brings together several components. Number one, trend; two, market conditions; and three, supply and demand. Okay, we're going to use a couple of time frames also. I'm going to start with a daily chart and then drill into a lower time frame to identify a trading opportunity that took place recently or a few weeks back. Now we're looking at the chart of Australian dollar versus US dollar. We've been in a downtrend for a while, as we can see here, so that's the first thing we need to identify. When we look at any particular chart, whether it's whatever time frame it's on and whatever instrument or commodity, the first thing you want to see is whether you're in a trend or sideways movement. The easiest market to trade in is in a trend. More money is made in following a trend than trying to call the end of a trend. And one of the principles that will help a lot of newbie traders especially is trading in the direction of the trend. If you can identify a market that's heading in one direction, the easiest thing to do is wait for the opportunity to get in that original direction. The hardest thing to do is to try and call the end of that direction. Although markets only trend around 20-30% of the time, the time when they trend is the easiest time to make money in the markets, as long as you know what you're doing. Now, obviously there are more advanced ways of trading the markets. When we look at manipulation points, we look at different factors, but that's a bit more advanced. In terms of how to keep it simple, the first thing you want to do is identify a trending market. The second thing you do after that is look for suitable entry points, either if it's going to be a break of a price or retracement to a price. There are different ways of entering a trade, right? So looking at this, what we can see is we've had sideways movement here at the top, and price has been in this downward movement for the best part of the year. What that means is it would have been easier to make money during this trending time. Now, as we got to the bottom here, sooner or later price will stall, and as we can see here, we've got this consolidation, price moves sideways, and then we have this move back up. At this point, if we were here, this could have been the beginning of a trend upwards, or it could just be the retracement against this dominant move down before it continues to go down again. Now, we're not sure, but one thing is for certain: smart money is trading this down. And what happens is traders who got in at the top, mainly the institutions who've been trading this all the way down, sooner or later are looking for exit points. Those exit points are going to be next, where previously price might have met some support. So however they've determined the exit point, they're going to look to offload their position sooner or later. And this is what's happening here, what we call accumulation. We covered this in more detail on the bank manipulation course, on the Forex Pro course, because this in itself tells us a story, and every chart has a story. This tells us there was strong selling pressure here, and that potentially could come to an end here. So we've got to bear that in mind. If you're trading here, your approach is going to be different to if you're trading along the way down here. So what we saw is price came down, formed what we call a few lows here, we can see, and I've highlighted that area here. This is with the lows that have been formed, and then we have this surge back up here. So if we're looking at this at the time there, what we would have seen is we've formed a low, we've bottomed out, this could be on its way back up. Then when you see a big move happen back down towards that zone, okay, that in itself presents a trading opportunity, and that's what I want to focus on. Now, the higher time frame always sets the context. It sets the tone for how we need to deal with that market. So in this case, we've looked at the daily chart. What we then would be doing is looking at a lower time frame, like a 4-hour chart or a 1-hour chart. And this is one of the main principles we use and we advocate a lot, which is using different time frames to build a bigger picture. All too often, too many traders just focus on one single time frame, and that's not good enough, because you need to look at the higher time frames, which are more where the smart money more actively trades in order to determine what the overall picture is. So looking at this, we can see our perspective on a daily would be: we've come down, we formed this sideways consolidation, we formed a low, prices come back into that low. Now, why did this low form? You've got to realize for this low to have formed, there would have had to be significant buy-in pressure that came in off these lows. Okay, sufficient buying pressure strong enough to push the price back upwards. So the idea would be if that happened on 1, 2, 3 occasions, then there's a chance that it could happen again when price gets to these levels again. So then what we do is we put on our probabilities hat. We think, okay, what's the probability of price turning from this point? There's a high enough probability of that happening. It doesn't mean it's necessarily going to happen, because price could go down and go straight through it. However, when price does come into this zone, we need to be prepared to examine what happens in more detail to see if there's a buy-in opportunity. Now, to identify that buy-in opportunity, what we would have done and what we did is go into a lower time frame. Now, this is a 4-hour chart, and if we look at, this is the consolidation we've identified on a daily. It looks clearer to see on a daily than it does on this time frame. However, what it's telling us is there's a buying pressure around here. So this is a buying area. We need to be prepared to look for buys. This is in other words, this is a demand zone, right? It's a demand area. If I go back to the daily, we can see here there's strong demand would have needed to come in to push price up, because remember, price is always a balance between demand and supply. If demand exceeds supply, price goes up. If supply exceeds demand, it goes down. So in this instance, we've got strong demand that's come in and has pushed price back up. How do we actually trade that? Well, the way to trade it is to look for an opportunity to buy if price comes back into that zone. And what we see here is once price shifted off this area and it sold off pretty aggressively here, consequently on this sort of move down, there would have been trading opportunities to go short on a lower time frame. Right, I'll cover that in one of the videos, but in this instance, because this, if we were looking at this here on the 4-hour chart, you'd be looking at a lower time frame to see what potential opportunities there would have been to sell, because the trend was down. Similarly, in the same way that we looked at the daily for the overall market condition before determining what we should do on a lower time frame. So getting back to what I was saying here, we've got a demand area here. As soon as price comes into that zone, what have we got? What happens? Well, price shifts back off it here. So this gives us another clue. Now we've got a demand zone from the daily. We've now got, this has now become a demand zone on the 4-hourly chart. So when price comes back into it for the third time, okay, it'll be the second time since it shifted off this demand area here. This is a 4-hour demand zone. That second time, the second time it comes, that's when you would look for your trading opportunity. So as soon as price has come in, shifted off this, wait for it to come back, we notice, we notice the speed with which price has moved up from here. Okay, there's momentum. It comes back down, pauses at that exact same place, pauses, and eventually shifts and goes up again. Okay. Now that produced a move of 230 pips, which would have been a nice swing trade. You noticed, however, that the momentum, although it didn't go up massively, it's gone up enough to have had a low risk, high probability trade. Okay, and also high reward to risk, which is what the game is all about at the end of the day. Looking at this now, looking at it again, we had the demand zone, it shifted off it a few times. Here was the trading opportunity in a 4-hour chart. And looking where we are right now, it's come back into that zone, but notice this time it's not really being clear and it's moved back up. It's gapped into it, gone back up, and it's back down here again. If it gives another opportunity there, there's a trading opportunity. However, the chances are the more times this particular zone is tested, the weaker it becomes. So if it takes out, goes below this, that invalidates this area, which means then we are still within this demand area, but it may come to test these lower levels first before turning. But if it takes out these lower levels, it means that that downtrend is still intact, and this was just a retracement or the correction before the further move back down again. All right, but what this demonstrates is that the 4-hour, the daily demand area identified, and what happens with price on a lower time frame comes into that point. Too many times I see people that will just identify a demand area here and buy as soon as price comes back into it. That's dangerous, because what you need is evidence that that level is going to hold just as it did prior to that. Otherwise, you're trading blind. Versus if you, one of the ways to do it is to drill to a lower time frame to see how it responds around this area here before you determine whether it's a good place to buy or sell, or good place to buy in this case, or do nothing, because we wouldn't be looking to sell here anyway. So I hope that gives you some insight or further application with regards to a trade on demand and supply. As and when more opportunities come up, I'll put something up, but I hope you got something out of that for the time being. So check out the rest of the content, the rest of the site, the programs, and until next time, happy trading.